What is going on YouTube? It's Sank. We are back with another one. Alright guys, we've seen a major shift in the markets today. The Dow, the Nasdaq, the SP 500 all down big on the day. So what I want to do in this one is give you guys some tips, some pointers to help you navigate what is shaping up to be a testing time in the markets so that you are able to come out the other side in much better shape. Before I get to it though, all I ask is that you guys hit the like button for me because it keeps the show rolling. So today, markets across the board were buckling underneath the pressure of the liquidity crisis surrounding China's largest property developer, that's the Evergrande, because right now they are getting crushed underneath 300 billion in debt and they're at risk of default. Now the market is getting jittery because if they were to default, it could have spillover effects into other property developers, financial sector, metals and mining as well. Now, as I was saying to you over the weekend, the SPY was in touching distance of breaking a major support. That was this 50-day EMA that's been holding up for the entire year. And if they were to break that 50-day EMA, I was expecting the whole market to go up in flames. Now, that's exactly what played out on the day. That 50-day EMA got broken and it torched the market, stocks sliding down all over the place on the day. Now the QQQ, the DJI also saw major breaks in their trends as well. So this puts the market in further corrective territory. But if you play your cards right, every crash or correction has been a huge opportunity for investors. But as I say, you've got to play your cards right. That being said, I want to go through with you guys some tips, some pointers to help you navigate a crash or a correction. Now the first is to make sure that you have available cash, and this is because we could be in the very early innings of a correction, and given most of the market is overpriced right now, this gives them a lot of room to fall. But when they do, it's an opportunity to deploy that cash and make the most of it rather than sitting on the sidelines and not being able to partake with those cheaper prices. If you take world-renowned investor Warren Buffett, you see the investment vehicle that he runs, that's Berkshire Hathaway, holds 142 billion cash right now. Now we don't need to hold 142 billion of cash. He's sitting on 34% cash right now. Now the reason why he's sitting on so much cash is because one, yes, he needs a buffer for the businesses that he runs, but also he takes every measure possible not to overpay for any business. Now what we can take from that is if we're only holding 2% cash or 5% cash, that's not going to be enough. We need closer to that 20, even better, that 30% mark to fully take advantage of cheaper prices when they emerge. Now, how do we ensure that we're sitting on more cash? Well, that's a good segue into the second point I want to talk to you guys about, and that is to be selective when you are buying in these markets. Now, when you're scrolling down YouTube, you're going to find a ton of videos saying you should buy this stock or that stock or this stock. What that's doing is creating FOMO. That's the fear of missing out. You don't want any of your investment decisions influenced by FOMO. When we go through crashes and corrections, we get a string of red days, but in between those days and intraday, we get what we call dead cat bounces. These are short-lived recoveries. This is where you see a play move up, then it comes back down, finishes up lower than where it started at. Now the reason we see these is because we have a lot of interest in stocks right now. You've got a lot of investors ready on standby to eat up any dips that do emerge, and crypto is also notorious for this as well. And on today we saw many dead cat bounces in stocks where they moved up just to close lower than where they opened up at. So these are set up like landmines in these markets that you want to avoid. You don't want to buy at the top of a dead cat bounce just for it to come down and then you're in the red on your money almost instantly, impacting your overall ROI. That's your return on investment. Now, before you go ahead and jump into a stock, what you want to do is a quick check on the RSI. That's the relative strength index. That's a momentum indicator. Lets you know if a stock is overbought or oversold. Now it goes from 0 to 100, 30 being oversold. Typically stocks that are oversold and they're quality stocks do bounce from that mark. Now what you'll notice today out there in the markets is a lot of plays are doing a U-turn from being overbought and they're trending down that RSI. So if a stock right now is at 50 on their RSI, you might want to wait till they get closer to that 30 mark where they are oversold. Now, many stocks out there in the market are only going to be oversold 2 or 3 times a year, typically during crashes or corrections or big pullbacks in the market. If we take an Apple, for example, right now, they are trending down towards being oversold for the 3rd time this year. Now, if you picked up Apple the last time they were oversold this year in May, you'd have made a lot of money as they did a U-turn and continued climbing. So Oversold plays present great buying opportunities if, as I say, they are quality plays. And that's a good segue into the third point I want to talk to you guys about. That is, ensure you're only picking up quality plays that you have high conviction in. Now, what you're going to want to do is ensure that you are in stocks that have a great track record of success, good revenue generation, good stock price appreciation over time. That shows you whatever comes over the next couple of weeks and months, they will be able to navigate that. And if you are long in the play, it's just a matter of time before there is that U-turn and you are comfortably in the money. You also want to ensure you're in plays that have great balance sheets, good management teams. Now, you might have heard that before, but what you might not have heard of is you want to ensure you are in stocks able to navigate the current climate. Right now, there's a lot of supply chain issues. That's one of the major things impacting a lot of companies. Now, if you are aligned to companies that are able to navigate those issues, it doesn't impact them, and also they have phenomenal guidance over the next couple of quarters, you are setting yourself up for success by buying them on the cheap. Now, I always say, if you're not able to comfortably explain what the company does, how they do it, what they're looking to achieve, and the price of the company, that's not the stock price, that's the valuation to a friend or a relative, then you shouldn't be in the play, because the stock market is the only place where investors run out of the store when there is a sale, and in doing so, you're leaving a lot of money on the table. Now, there's a very easy way to see if you have high conviction in the play, and that is if I asked you, would you buy that stock if it dropped down 20%? If you have to hesitate or it puts you on ease, you don't have high conviction in the play. And at that junction, what you need to do is either educate yourself on the company or just move to another play that you have much higher conviction in. Alright guys, so that's what I've got for you in this one. If you apply that out there in the market, it should put you in great position to come out the other end of this correction in phenomenal shape. Now, if you want to see exactly what we are buying and when we're buying, make sure you hit that top link in the description to tap into our Discord. Every crash and correction presents major opportunities, and we are gearing ourselves up for some phenomenal success. So I look forward to seeing you guys over there. If you guys got any questions for me, drop them down below and I get back to you. On your way out, make sure you light up that comment section for me. If you're new, join the movement by hitting that subscribe, and I catch you guys in the next one.